before 2026, because 2026 is going to be a great year of huge opportunity,
Monday.
but also is going to destroy a lot of people that are not prepared. And then we're going to go on to the top 3 stocks that I'm going to argue are must buys before 2026. Each of these stocks are obviously undervalued, have huge outsized growth rates, have been ignored by markets,
It's 2026. So let's jump into a little battery storage and data center connectivity. 3 billion up 30% year over year, 30 million up 100% from the prior quarter. Pretty incredible. So Q&A on YouTube. Missed a couple of questions here from Kitty Kush on Sunday about November 20th earnings day for NVIDIA. So yes, pretty much November 19th. Okay, let's get cooking here. If you do have any comments, go ahead and drop those in the old chat. But yeah, here goes nothing. This chat really will display your message during the recording and during the live, so that's fun. All right. Trump's energy stocks will help you retire early. This one stock, the ticker is EOSE. They do battery storage, had 100% revenue growth quarter over quarter. So it doubled. That's a pretty big move. It's not a lot of revenue. It's 10 millions or so. What is impressive is there are a lot of battery companies, battery storage companies as well. This one is holding up the best. Battery storage is needed not just for electric vehicles. You know, Tesla has the power charger, power wall. You can keep in your house for, if the power goes out, you can use that battery to charge your, well, to run your electricity. It's not just to charge your Tesla. EOS is bringing that technology to the grid, and the grid is becoming sexy, exciting, investable, growing at a high rate in terms of market cap, these grid companies, because the data center companies are growing at a high rate, because OpenAI is having a valuation in the stratosphere in the 500 billion plus range now. So it's all connected, and EOS is providing that storage for wind and solar, which are really intermittent. And there's tons of capacity, but it doesn't always become available at the right time. So batteries help smooth out that load and literally balance it. There's another company, ticker symbol CLS, Celestica, that's also benefiting from the AI data center boom. They do connectivity, so server connections, GPU connections, it's networking, and it's a massive company, 3 billion of revenue, multi-billions, up 20-30% year over year growth. So it's a lot for a big company. Now, there's a lot of networking companies as well. I'll jump into all of them in just a moment, but CLS is holding up exceptionally well, even though it's had a massive run. So let's jump into these price agreement, what I call them, charts right now, to actually visualize what we're talking about here. It's not financial advice, hope it helps.
This is Sam Putnam.
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 So here's the chart for EOSE, EOS Energy, and you see a higher low here. So what that indicates is stock went up, right? People wanted to buy it. They said, oh, it's not quite worth that much right now. Went down, and then they said, well, it still wanted more than it was a week ago down here. So there's demand, and now it's leveling off. So if we really zoom in on here, you can see the opportunity is pretty clearly in all of this zigzaggy, is it worth this much? Nah. Is it worth this little? Nope. Price action over here. So 15 is a really important level if you want to get granular. This high would be great to risk 15, 16 as we open up in just a few minutes here. You can see the time. We're about 10 minutes from open on Monday. Of course, if this chops around and you see this the next couple of days, end of the week, this 15 is important. And then over this high of 16, which is right here, will also be important and clear your easy levels to risk off of. Of course, as you've experienced, I'm sure, can you sometimes get a move where, it goes up over 16 and then, fails and goes below and then actually breaks out? You can. So sometimes you have to take an entry or two, as long as your total risk budget is not more than, say, 0.5% of your account at most. That would be acceptable. So if you have a 500K account, you really don't want to be losing more than 2,500 getting positioned in one of these stocks, considering you might lose, 8 times in a row. And then those 2 losses more than make up for all those, 2 wins more than make up for all those losses. So, if you lose 8 times in a row and you lose $2,500 a piece, I don't know if that's a huge deal for you, but I don't want to, that's $20,000, right? So anyway, that's the opportunity in EOS. And then if you look at CLS, you see the strength as well, higher low we just talked about, and some growth, upward movement in the pre-market already. So it is a little bit of gap up. You don't always want to buy a gap up. The market itself is not really gapping up. It's just moving sideways. So this gap up is sort of isolated to CLS. Of course, this is not a real-time video. I mean, you can see this in a few days. If this comes back, rejects, that would be ideal, if you did something like this. Of course, that's the dream, right? That's where the price agreement is so tight that when it does go up, people say, okay, we're going. Everyone's agreeing. Well, enough people are agreeing it's worth more. And you can get a move like this Tesla back in August, okay, which is just incredible volatility contracting and then exploding to the upside. Does it always happen like that? No, but it's, translates across asset classes. I mean, if you look at Bitcoin, this is very similar to the Tesla breakout, right? Does that look similar or does that look similar? That was actually last year, but we got a similar little move here. It's not that little, it's 15%, but Bitcoin, of course, during horrible, right now, a little bounce, MicroStrategy having a little bounce as well. But, I should start calling it strategy. That's what they changed the name to. I don't want to buy this. Do you want to buy this right here? I mean, it doesn't look that exciting. So let's jump into a little about these actual energy equipment companies, because, it's great to be excited about what they look like on the chart, but it's also helpful to get a little bit of context and make sure if you do own this, investigate. So sometimes you do it in that order, but it never hurts to investigate before you buy it. So 30 million revenue, up 100% from the prior quarter. So there's ChatGPT is many times above revenue from the same quarter last year. It's like, okay, so I think what these things is like they basically had, a few million revenue or something one year before. Massive growth. We can check that if we need to, but I don't think we need to. Revenue guidance is reaffirmed, so you have all the sort of, the earnings reaction definitely sold off, so we don't want to read into this too much, but at least we're seeing that, that sell-off was partially the market, and if we look at some other companies as well, FLNC sold off a little bit here. This is into November 20th that FLNC was going down, so that sort of lines up. FLNC went up since then, but and then there are some battery companies as well, not just battery storage companies, that are worth keeping an eye on. This is a big backlog, 600 million for a revenue of 30 million so far in this quarter. Of course, over the whole year that'd be 120, but this is crazy, right? I mean, that's like 5 times their annual revenue. So they have enough work to do 5 years of work. So they're obviously going to have to expand, or hire people, do some acquisitions, or shed some of this backlog, no pun intended. So anyway, they did have a loss, and maybe that's an indication that this is a startup. I mean, it is a startup. So you can see all these. I don't know what's going to happen to this load balancing startup, but what you do know is that you don't have to bet on it over the next year. I'm literally talking about, if it's not already clear from other videos, if you can get a 20% move, which is risking, I don't know, 20 cents to make $2, right? $2 would be up to 17.17. So 18.18 would be 20%, I guess, but that's pretty big, and there's enough liquidity too. It trades on average maybe something like, I don't know, call it generously, conservatively, 5 million shares a day at a little over $10 is something like, call it $8 million a day. Well, not 8 million, that would be 80 million. So you can put a 1/100th of that with a click of a button and not even move the stock at all. So it'd be like 800K with the click of a button. So there's plenty of liquidity. If you're, super aggressive, you could put up to like 5 million, I guess. But anyway, that's helpful because that means you will get some trends. It's not going to just totally chop or chop out, or, we're not messing around with its stock, but you might be interested in Kit. I've mentioned it on this channel, but the liquidity is big right now. But if you look back, it can also be kind of a trap. So if you do buy this and then you don't pay attention, you could get caught in some kind of, trades 100,000 shares a day at $1. It's 100K a day. You're just totally stuck with that. So those are sort of a comparison of options. And if we look at some of the other battery options, we can pull them up over here, but FLNC is definitely the main comparison in energy storage. It's not totally, so this backlog is legitimate, I guess. FLNC is not totally similar, but Fluence, they do storage plus software solutions. They're definitely a peer. We can exactly look at what their description looks like, but we just want to differentiate between energy storage companies and actual battery companies. So Fluence, it sounds like, does do energy storage products, pretty much the same thing. They're a subsidiary of Siemens, which is a massive company. And it looks like they also do a lot more. So sort of software monitoring. I think EOS is the most pure play. They literally design, manufacture, and deploy the battery storage solutions. So this is what you want to watch, FLNC and EOS. This one I haven't really heard of as much, EnerSys. They actually make the batteries as well, it sounds like. So we'll actually look at all of these at the same time. So ENS is one, Generac, and NRGV as well. So ENS looks like it's pretty illiquid. I wouldn't have any sort of interest in touching this or even paying attention to what it's doing, even though it looks like it's going up. Generac is looking strong. It's a little more liquid, not a lot more. Well, actually, it is. It's a $100 stock, so it is pretty liquid. It's trading like, what is this? 300,000 times 100 would be 50 million. That's not actually 300,000, like 500,000. So it's pretty similar. Maybe slightly more liquid and more cyclical. I mean, this is kind of a pain to trade. I did mention a company a few days ago, IoT, that is also a pain to trade. That even though a company can have a great reaction and holding up, so you can risk very little. When you risk very little and then it just never moves, or it does move up and then moves down, it's also not interesting in the long run. So, a little side note on that. I don't regret mentioning it, but I won't mention it again unless it shapes up. NRGV, kind of has moves like that, but this was pretty clean, so this is a little better. And then the liquidity here is pretty much not, so definitely won't mention this. All right, so if it trades, 10 million a day, we could just completely ignore that. So it's really just Generac and Fluence. And then as far as, I'm mentioning a lot of names because some of these other names are interesting as well. AMPX, QuantumScape are the main battery companies. So they actually target EVs as well, because they actually make the batteries, I believe. So that's AMPX shaping up. Enough liquidity, 50 million. And EOS looks a little better. We can sort of see how similar they look. But I do think this higher low, this shelf, it's very similar to AMPX, but I guess we can look at volume too. I don't know. I mean, they kind of seem like a toss-up. This is sort of not a lot of movement in general. I mean, we're up 20% to $12, $10 stock, whatever. And, $15 stock, up like 20%. They're going to move together, it seems like. So pick whichever one you're most comfortable with. EOSE definitely has had the cleanest move since the tariff bottoms. So AMPX had a little bit of a pullback, which, if you buy it here and you're just stuck in it for, a full month and a half, you might sell out and miss this breakout and miss out on an extra, 100%. So it's a close call. QuantumScape as well in the conversation, holding up here. And yeah, it's interesting, but again, it's very volatile. This is a big down move, 30%, but totally liquid, even more liquid actually. So in the mid low hundreds of millions of dollars per day. So EOS Energy is the stock. There's another stock that's interesting that I barely even talked about. That's CLS, but that level is pretty clearly 339. And, you can risk off of 328. So breakout level versus the actual, risk level. So pick something that makes sense to you. Maybe you buy it at 350 and you risk 345, or you let it go through there and then come back and then risk off of 332. I'm giving you a lot of levels because this isn't like a prescription. This is more of a recommendation, an idea. So that's definitely firming up, but it's also up a lot. So keep that in mind. Keep an eye on AAOI, COHRLITE, and LUMN as well. They're all in the same optoelectronics networking category. So hope that helps. If you like those ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to jump in the Discord, where I'm headed right now to drop what I think is the best idea of the day, head over to stockscommunity.com.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so what do we got cooking here? Definitely some strength in some of these names. I do think CLS is up too much, but some of these just look incredible. some pulling back a little bit. And small caps kind of at this breakout spot. So yeah, if you do have comments, questions, drop them in, and we'll continue on here. Got a little bit of a late start here, but it's all good, right? It's sort of interesting as well. All right, so let's take a look at some names like this. Okay, battery storage is good, but a literal data center compute provider is even better, probably. Get a little fired up here.
Have huge long-term proof of concept and are centrally located in the AI spending boom. I'm going to present the story, the business, and the case for each of these, and I'll let you be the judge. And then we're going to go on to our sponsored segment on Foremost Clean Energy, ticker symbol FMST on the NASDAQ. They're a uranium exploration company that's positioned right in the middle of what could be one of the biggest energy stories of the decade. I'm talking about the nuclear renaissance being driven by AI data centers. But this isn't just about clean energy, this is about supply and demand. This is about a potential structural shortage meeting exploding demand, and that's where it gets really, really interesting. I'll present the company and why you may want to take a look at it. And as always, if you're the one taking the ultimate risk, you got to be the one doing the ultimate frisk. Always do your own due diligence on all ideas presented. Lots of people get risky, but they don't think about doing their frisky, and vice versa. Big problem in today's society. Okay, so we need to start with what the market is thinking right now. So right now, we're in the beginning of a process where companies are investing oodles and even poodles of money into AI. And the ultimate goal is to reduce headcount, stay competitive with peers, and overall dramatically increase productivity. Now, a lot of short sellers and the Barry McBarrys say that companies shouldn't be investing in AI.
Okay, all right. That's a little too much. Cipher. We want to look at revenue. They're operating at a loss. They mined a bunch of Bitcoins, and this is the major deal with AWS. Okay, 5 billion is significant. They have a joint venture to develop a gigawatt in Texas, and then Wolf. It's in the same conversation. Very similar size companies. 15-year lease valued at $5 billion. I don't exactly get who's paying for the lease, but I think they are literally leasing. So they are leasing Amazon's servers, or vice versa. That's what I want to know. And then Wolf, 50 million of revenue, up 90% year over year. It's a lot. Okay. I think they leased to Amazon. Yeah, they leased to Amazon. TeraWolf leased to Fluid Stack. Which has an agreement with Google. Okay, so Cipher owns data center leases to Amazon for 15 years for $5 billion. $30 million in revenue for quarter 3. This one stock can change early buyers' lives. I'm not a financial advisor, but some financial advisors might say to buy as much as possible before December 12th. The company is Cipher, ticker symbol CIFR. They had 30 million of revenue in Q3. It's up significantly. Notably, they have a 15-year lease agreement with Amazon Web Services, valued at around $5 billion. So they were a Bitcoin miner. Now they're a data center infrastructure operator. They contract out the actual building, and they get the money from the hyperscalers. AWS is the current one. There is another company, TeraWulf, ticker symbol WULF, that is very similar. Former Bitcoin miner, now data center operator. And they have an agreement with FluidStack, which is guaranteed by Google. So all the money is coming from the companies that we use and sometimes like, the big hyperscaler companies, and it's trickling down. And these companies, Cipher and Wolf, look like they are effectively making the transition to infrastructure compute provider from actually using that compute to mine Bitcoin, which you can make some money on those fees, but it's not nearly as much as you can make by providing compute for massive AI workloads that go into recommendation systems for companies like YouTube to recommend videos, or Netflix to recommend videos, or companies like SAP or Chase or Capital One, who have to run millions of data points into algorithms that take up a bunch of compute in order to give somebody a credit score, or approve or deny them for a credit card, or let someone know if there's fraud happening on their account effectively, accurately. Sometimes they're not so accurate, but they do a pretty incredible job. So all this boils down to Cipher and Wolf being interesting investments in the near term. No one's going to tell you that these are going to be around forever, but right now they're the real estate holders, and AWS and in essence Google are the tenants. So it's not the worst relationship to have. Let's jump into a little breakdown.
This is Sam Putnam.
This is Sam
Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
All right, so here's Cipher, 70 million in revenue for Q3, up significantly. They do have a little net loss, but we're still at the beginning of this build out and use of data centers. Sam Altman and Elon are shouting about hundreds of gigawatts in the next 10 years. Just getting to even a tenth of that, 10 gigawatts or 20 gigawatts in the next year or two is going to be a major milestone. So let's see if that happens. They were founded recently in 2021, and then this other company, Wolf, is doing something very similar. They do talk about clean energy. I don't know how attractive that is as an investor right now. It's not like there's subsidies for that under the current administration that are nearly as attractive as they might be, in 2028. But we don't really have to worry too much about the long-term business models of these companies when you've got a little, price agreement flag, call it whatever you want, where you can buy at, $19.70 or $20. You can risk 18.50. And, if you risk $1.50, you need a move of $15. So that's one way to do it. But maybe you don't want to risk a full 8%, right? If you actually use the flag, I'm not trying to be abrasive here, but if you really use this flag for what it's setting up as, you can risk something like the low on the current day, and now you're risking more like 30 cents. So that's where this gets really interesting. I'm not totally trying to sell you on trading on a 5 to 10 minute chart. I'm just saying if you do get in, say here at 1960, you're risking 1940, that's 25 cents, wherever it's at right now. Now you only have to have the stock go up $2.50 to get that 1 to 10 risk reward. And there's enough liquidity here. It traded 1.5 million shares at $20. We'll just call that $30 million in the first 10 minutes. So click of a button, you can put, a tenth of that $3 million and not move the stock, more than say 10 cents. So that's the opportunity here. And we can see this literally working in real time as I record this video. I don't want to make any precise predictions because, 8 out of 10 of these fail. So it could go right down here. But the whole point of how this works is if you do lose whatever percent that is, it's a tiny percent, 0.5% on a 10% position. So if your 500K account puts 50K into Cypher and you lose 0.5% on that, well, 1% of 50K is 500. So you lose $250. So you do that 8 times, you lose $2,000. And then those 2 times you make more than $1,000 a piece. And that's totally achievable because if you did put 50K in here and then you did get that, $2.50 move up to 22.50, well, that's pretty awesome. That's like 15, percent, which on a 50K position is 7,500. So the math more than works out when it works. And if we look at Wolf, this is setting up similarly, maybe not quite as beautiful as sort of technically attractive as this Cypher in terms of risk reward, just because it's a little more choppy. There's not much volume here. Cypher volume isn't huge, but you can definitely see some volume coming in here today. 3 million versus right here today. This is 1.5 million, and they're very similar priced stocks. So you can take a look at the intradaily and get a feel for which one you're more comfortable playing. And I don't want to use the word playing, but everything is a game at some level. So pick a level. If you buy over 15.2, maybe you risk this high of 14.8, risk 40 cents or 30 cents. And as always, manage your risk, do your own research. But I personally think Cypher is holding up a little better right now. And there are some other companies that are setting up as well. Iron Energy is in the same bucket, but I personally don't think this looks as strong given this is a lower low, or if you want to call it a hold, that's fine, but it would be nice to have this firm up a little bit. The rare earth companies definitely are in the conversation, but there's not a lot of activity here, even though the volume is maybe slightly ramping up. If you look at Cypher and Wolf, actually what happens is the volume is trailing off, which means there's less selling volume. And if we look at, let's look at this beautiful Tesla breakout as an example. So right over here, there was volume that increased, but it wasn't until the actual breakout happened. So if you look at literally the move, in its infancy, the volume didn't increase as the price started to get up and contract. If anything, it actually trailed off a little bit So, you know, that's something to be aware of. There's less sellers. The volume's actually going to go down even as the price starts to go up. Of course, when everyone thinks it's, breaking out, the volume comes in. But at that point, it's pretty much too late, or you're chasing a little bit. So this one was so technically sound that you still got rewarded even if you bought it a day or even too late. But I mean, if you're at the end of the day, you're only getting 15% if you're late to the party, and you might even get stopped out on a day like that crypto liquidation day of October 10th. So that's sort of the name of the game for breakouts when they do work. They don't always work, but winning 20% of the time, it means that they can work, well and fail a lot. So this is a little bit more about Cipher, their Bitcoin transition and this data center agreement. They have a joint venture to develop a gigawatt in Texas, which is a lot. And they do have this debt that they got on their balance sheet, which, gets them some money. You don't really want a company going into debt too much. We can kind of use this cash position, though, just to show how much of a runway they have, $2 billion. Would it be great to pay some of that off? It would. But, I mean, it's just the beginning of these big companies paying the data center companies. So it's sort of a process. And, profitability is going to be good. But it's just the beginning of these massive contracts. So they have the big backlog. They have a lot of cash on hand as well. So they have debt in order to keep, running the servers. And then, these companies are pretty good for their money. Amazon, Google. So it's not like the debt was just given to them willy-nilly. And then this other company, Wolf, Google is paying the lease directly. I don't know why I used all caps, but sometimes I'm all over the place here. So that's helping them as well. TeraWolf is renting it to FluidStack, and then Google is the backstop. So Google literally gets the tenancy, or just pays the termination fee. I think this termination fee must be big enough where it's going to be okay for TeraWolf either way. Google also got warrants to buy shares in TeraWolf. So 15% of TeraWolf is a lot. We can actually see those warrants. So it's sort of like getting shares. Well, it is getting shares, but you actually get them when the price of the stock goes over a certain level. So, sorry, there's just a lot of dilution instruments down here so they can raise money. Looks like this has already happened. This, shares were converted. So this is what happens. The warrants get converted to shares, or the debt gets converted to shares, which is what a convertible note is. And then somewhere up here, after all of these different convertible notes, these companies have taken on a lot of debt to be able to buy these data centers and build them out. Here is the actual warrants here. I would expect to see Google somewhere on this list, but it also might be through, here we go. Here's Google. So they're not registered, so they have to literally be registered with the SEC with a registration statement. But 70 million warrants at a cent. So they can exercise these at any time. The price is, of course, well above a cent. They were issued, in late August. So it's something to be aware of. Google could sell them at any point, but I don't think Google is, that kind of warrant holder. There are warrant holders for smaller companies. This is a relatively small company, but I'm talking about, companies that have a market cap of like 100 million, where you have to watch out for warrants because they can be a bit of a spiral to death, and the stock price just goes down and down. as they exercise the warrants and then sell the stock. But this is a long-term agreement, 10 years. So that makes this attractive because this company, TeraWulf, is small enough to have that big growth opportunity, but big enough where you're not just basically dealing in borderline financial fraud as a retail shareholder. So that's nice. And this is a lot. 200 megawatts is a lot. If it works out to 4 billion, that's over 10 years. So I guess each year this works out to something like 300 million. So it's maybe like $1 per megawatt per year. Not $1 million per megawatt, $1 a watt. So it's nice to have these little rules of thumb, but really all that matters for us in the near term is to know that these two companies have big companies backstopping them. They're not super overpriced. They can make incredible runs of 100, 200% or more. And right now they're firming up for moves. I mean, Cypher is already moving. I know I said I don't want to call, this one as a win, but it looks good so far. Again, it's still 80% chance of failing, but that's why you have a small risk. So if you like these ideas, hit that like button. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to follow the rest of the stream, head over to stockscommunity.com and try that out for 7 days for $25.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.
Dokes. What else have we got cooking here?
At all, because it's expensive to build out data centers, it's expensive to implement software, and it's difficult to integrate AI software to companies that haven't been using it for many years. When you're starting to implement software into a company, well, there's a lot of lag in actually implementing it properly. There are so many companies in the economy that are using AI, but it's more like bloatware, and their employees are never really taught how to utilize it efficiently. So a lot of short sellers in the Barry McBarry say, look, AI is a massive fraud and scam and Ponzi scheme. Well, this is a very, very shallow, inaccurate argument. If you're dissing on companies because they're investing in AI, imagine what's going to happen to the companies that don't invest in AI. If you're the one company that's underinvesting today, you're not going to be around tomorrow. The bear logic, company X is spending $50 billion on AI and might not see returns for years. They're idiots. The reality, if company X doesn't spend $50 billion on AI, their competitor will, and company X gets wiped out anyways. Back in September, Zuckerberg famously said he'd rather risk misspending a couple of $100 billion than be late to super intelligence. And people said, wow, that's so terrible that he would say that. Well, it's better to misspend a couple $100 billion today to ultimately get to your goal versus not spend it at all and be 100% destroyed by your competition. And if you look at how companies are running their AI investments today, that's the vast majority of them. They're thinking in the same way. They might not have a couple $100 billion each, but they're starting to play more and more along the same lines. And where is the vast majority of this money going to go? Well, into AI businesses selling the picks and shovels of AI. Who are these AI businesses? Well, number one, chip designers. Think NVIDIA, Broadcom, AMD. Chip manufacturers, think TSMC. This is really the only one that matters in the space. And then think software. Software, there's many players, cloud computing, AI platforms, integration solutions, and cybersecurity, power/energy companies, utilities, nuclear, natural gas. I think nuclear is very, very exciting in this segment. Cooling infrastructure, liquid cooling, thermal management companies, networking, fiber, switches, and connectivity companies, and then data center REITs, the actual physical buildings and properties where these data centers are going to go up. I think you're going to see.
Okay. Very exciting. It's very, very exciting. If you have any comments, questions, go ahead and drop those in the chat. They will get displayed on the screen, but I think you knew that, so it's all good. Yeah, I'm going to talk about Urban Outfitters and Rubrik. Although Urban Outfitters doesn't look great. Rubrik looks a little more interesting. Probably gonna have to swap out Urban Outfitters. Estee Lauder is still interesting, but it's probably got to pull back. Broadcom. Pretty strong going into earnings. I don't know. Big pullback on GEV. That could be a buying opportunity. Rubrik still has this close, so that's interesting. Okay. It's all sounding good. Let's do this. GEV and Rubrik. So let's do that. GEV. I don't know if I know what to compare Rubrik with either. But GEV. Talked about that a lot. Okay. Oh, I see what's going on. I didn't put the thumbnail on here again. That's why you guys aren't here. Incredible. Someday I'll remember to do that repeatedly, but it's not this day. 10 billion at 10% year over year. 15 billion of orders. So that's good. And then 350 million of 50% year over year. Data security. So that is what we got going here. Zscaler and CrowdStrike in that same conversation. Okay. Cloud native data management, network security, endpoint detection. So Rubrik does backup. Zscaler does threat detection, and CrowdStrike does that as well. Access control. Anyway, GV 10 billion, up 10% year over year. 15 billion of orders for power generators. Okay. Whereas Rubrik has 350 million, up 50% year over year. Okay. There is one stock that is about to skyrocket. Company is GE Vernova. They're a spinoff from GE, General Electric, and they do power generators. So that segment is up 50% year over year and has $15 billion of backlog. The company as a whole, they have other verticals as well, is doing about 10 billion of revenue, up 10% year over year. So the massive growth is from these generators. We'll look into what else the company does. It's not just a construction company. They also do electrification in general. They're GE, right? And they have some similar tickers that are getting this boost from the data center, boom that is finally trickling down from software, hyperscaler, all the way out to actually making these things built out and supply compute to who is eventually the end customer, like OpenAI. There's another company that's interesting as well right now. It's Rubrik Software, ticker symbol RBRK. They do security. They do backups, which is pretty important for enterprises. Basically, every enterprise company needs a backup provider. What happened initially was people were saying, on-prem servers are the safest, right? When cloud started to become big in, 2015, 2010 was mobile. We're all going to be looking at our phones. Well, enterprises, which are the Fortune 500, which is the S&P 500 basically, that doesn't affect their IT spend. They're still spending it on servers, and they don't want to give Google and Amazon all their data because it's going over the cloud, right? It's super, ambiguous and just fluid as to what that could possibly mean. But what ended up happening was, it turns out, having two sort of outsourced consultant for your little on-prem server is not really safer than having thousands of, genius Google and Amazon AWS employees who are maintaining security for a multi-billion-dollar cloud product. So there was a major data breach involving, emails, and remember the Sony, it's called the Sony data breach, and that made all executives say, well, what if my emails get, leaked? And suddenly when the CEO is worried about their own emails, then they move to the cloud. So finally we're there. This is all happening 10 years later, 2025. And Rubrik Software is a security provider that is looking to capitalize on that finally. So let's jump into what these companies are up to.
This is Sam Putnam.
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 All right, so here's GEV. There's other companies that are similar that we've heard of. Siemens is a big one. They make gas and steam turbines. Mitsubishi Power also makes heavy-duty turbines. And Schneider Electric, Grid Solutions Hardware. Generac is sort of similar. They actually sell consumer generators that you can buy and that really fly off the shelves during hurricane season. But it's also in the same conversation. So we can look at those charts, but the only one that's super relevant is, I guess, Generac. These aren't even really publicly listed in the way we would want them to be. This is an ADR, so I don't even know if I can pull this up, ENR or SCHN. I certainly haven't been looking at these, but yeah, this is Energizer, SCHN, and Schneider is not even on here. So all we can really look at is GEV and then the data center plays as a whole, which it hasn't mentioned it in the ChatGPT, but you know what? Sometimes you just have to pull from your own ideas. VST and VRT are sort of similar. Neither of them look to be shoring up. This is the biggest base for sure. But what you can do is say, look, it's a $100 billion company. they sell electricity, but they also provide these storage solutions and these generators, and that's why it's interesting right now. So it's a utility company. It is a spinoff from GE. There are tickers that are sort of similar that aren't generally grouped with GV, I believe, because they build the infrastructure, server racks, backup power, but they don't do the actual electricity delivery, which I think is a big part of this company's market cap right now. In the future, I think a big part, it seems like, is going to be actually building these turbines. So GE Vernova had to build their turbines in order to fulfill their electricity contracts, it seems like. Well, it wouldn't make any other sense why they would build them. And now those turbines are being used for data centers. So it's nice to be in the right place at the right time. VST is another one that actually generates power and sells it. And it looks like they're maybe the most similar. So GE Vernova and VST, I think, are Vistra the most similar. But again, looking at the chart, I wouldn't touch VST right now with a 10-foot pole. I mean, right, this looks terrible. It looks Bitcoin reminiscent. So this is the opportunity here. These are the levels right here. I'm purposefully making this video as it sells off, because what that did is, this is frustrating, right? A 10% move is great, except when you try to get into it, this can happen. So you are getting a pullback to 612. So you can literally risk $3 if you're interested in buying this. This is a 5-day moving average here on the daily right here. So that's up there at 623, I believe. I don't know what's this moving averages I got here. Should be up here. I don't know why it's down here. We'll look into that. But the point is, what you can risk off of this high, this is 609. And if you risk off 609, or 612, whatever you're more comfortable with, risk $3 to make 30. So that way you can sell up here rather than needing another move up to 670 or something crazy like that. So that's the idea. Ultimately, of course, that 670 is why we're watching it, for a breakout of this massive base. It is sloping down, but it's still holding up compared to other peers. VRT, it looks fine right now, but it's just marching up, and it's hard to get positioned in that. It looks like CoreWeave, right? It's like, do you really want to try to get positioned in this and then get stopped out here and then buy again and then get stopped? It's like, it's just ugly. So if you can find a big base, get a favorable position, sure, maybe you get chopped out a couple times, lose $3 a share, lose $3 a share. You could lose $3 a share 3 times, right? And all you need is one move of $20 a share, and you've basically doubled those losses. So not including commissions, but commissions are negligible these days. So $20 a share isn't even anything. I mean, that's 3%. Really, we're talking about more like $60 a share, something like that. So that's the idea. And I'm not saying that these companies aren't worth looking at, VRT and VST. It's definitely worth looking at any sort of deals that might come out, any sort of collaborations with big hyperscaler companies that actually are, I don't know if they're paying, I mean, they are paying the bills, but they just have the most cash. So that's why we always look at them. They make up 30% of the S&P, right? What we just want to watch is, are data centers in demand? Is there any sort of AI bubble narrative change in reality, not just in the stock market? And, what I mean by in the stock market is we might see a move down for a couple of days. That's no big deal. But if something comes out where, say, OpenAI releases numbers, I mean, OpenAI is private, right? And the reason we talk about them is that they are trying to raise $1 trillion. And so all that money is going somewhere. It's going to companies like GEV. If they, for whatever reason, release revenue numbers that are just underwhelming, and it turns out people don't want to upgrade ChatGPT. I mean, ChatGPT is fine as it is. And then when they do rate limit it so much that it becomes essentially unusable, people aren't willing to pay for it because they can just go to Gemini, Google's thing or Meta's thing, and get the same answers. And, Google is happy to provide that load because they can serve, advertising links below that. And so, it's no big deal if they lose a little bit of money on answering this query. And there's little differences between them. This isn't about predicting the whole future of AI. There are plenty of people that talk until their face is blue on that. But it could happen. There could be some sort of issues that come out in 2028. Maybe, the public policy, the sentiment is just really negative on data centers. People don't want them in their backyard. Maybe something happens where, again, people don't want to upgrade their ChatGPT, and ChatGPT is a consumer product. So it could definitely happen. Something could happen with China, although, we are pretty independent at this point. That's super broad, but that's what could really affect a long-term move in this company. But that's not what we're all about. What I'm trying to share with you is an opportunity that could make 15% in a couple of months at most. So that's GEV. That's probably more than you necessarily wanted about GEV, but that's an idea. Rubrik Software is also interesting. They just had earnings, and their peers are Zscaler, and which doesn't look great at all, and CrowdStrike. So Zscaler earnings came out a couple days ago, a week ago actually, and no bounce at all. So it's not interesting. Could you get a bounce like the Meta bounce? You could, but I always say this: like, are you going to buy it here? It's going to go down more. You're going to buy it here. It's going to go down more. So it's just very difficult to time these. Remember the trade desk back here. You're going to buy it here. Well, it went down more. You're going to buy it here. Well, what time? You're going to buy it here. It went down even more. So Netflix is another one that had a very challenging earnings. Maybe you bought the bounce and you got it at the right time. You got 2%, 3%, great. But don't hold too long. So you can get these little ramps, but you really got to be careful with bounces, because what a down move indicates is a lot of selling pressure, and that coincides with a lot of volume. And you don't want to be buying when there's a lot of volume. We talked about that in the Tesla breakout, right? If you're buying when there's a lot of volume, you're kind of late to the party. Right? This was the time to buy, sometime down in here. And on the downside, if you're buying when there's a lot of volume, look at this volume that came into Spotify, and you're buying here. Well, it just went lower. If you're buying here, great. This is technically a green candle, just barely, but it didn't go anywhere and actually went lower. So volume is fine to scan for these tiny companies like Intuitive. This is not a tiny company, really. It's a massive company. But Intuitive Surgical is actually shaping up pretty well, ISRG. What I was really thinking of is this little robotics company and this KITT, ton of volume coming into it, but selling off. So there's a lot of risk there. What was the company that started with an I that I was trying to... Oh yeah, iRobot. So volume can indicate interest in a tiny stock when it's far exceeds what the volume was in the past. And iRobot is showing that with the Trump executive order robot news. But otherwise, for big companies, you don't want to pay attention to big volume unless it's an earnings reaction, or a big product announcement, or a massive change in character announcement. So that's a lot, but hopefully that is somewhat clarifying. There's a close here at 86.2 on this first day. That's what you want to risk off of. So you buy it at 86.7, risk 50 cents. Maybe you get chopped out, maybe you don't. Throw in a stop there. Go to the store, go to your kids' soccer game, go to work, go to the beach, go to the bank, whatever you're up to. Stops are everything. So you risk 50 cents, look for $5. You know, $5 on the $86 stock is whatever it is, $91. It's totally achievable, right? Even better would be an actual breakout, like we were talking about GEV, up to over that $100 psychological level. So that is the opportunity there. And those are the ideas. If you like these ideas, hit that like button to get those in the YouTube algorithm. I think the volume should be okay here. I know we're doing some construction here. If you want a free course on how to find the next NVIDIA without gambling on startups, hit that subscribe. And if you want to meet up in the Discord, head over to stockscommunity.com. You're going to see some pretty cool testimonials. I'll flash some on the screen right there. It's about a $6,500 gain. And how about this one? 10 grand. So check it out if that is an opportunity for you, not financial advice.
Sam Putnam.
This is Sam Putnam.
This is Sam Putnam.